Okay. So what we're gonna do now, we're gonna basically take out the navigator. So click on the X where navigator is. And then what we're gonna do, you're gonna right click. You know where you see CCI? Where you see that CCI, you're gonna right click in the CCI for me.
Whereabouts is that?
Yeah. Just right click in
Oh,
that.
this one?
Yeah, just right click there for me. And then you're gonna click on delete indicator window. Scroll down. So move over and then scroll on delete indicator window. Okay, and then what we're gonna do now, I'm gonna show you like if we look at, say, this is GBPUSD. I'm gonna share with you the first thing how we go about doing a buy. Okay, so you know where you see that buy button there? You see that button there? Yep. Just click on it. Okay, and then where you see accept, click on
Yeah.
accept, and that's gonna make you can go live into the market, like, and then click OK. Now you're all set up now and ready to go. But what we want is I don't really like on that green type of green. So you're gonna
Okay.
right click on the chart for me, right click on the chart, and then go to template, then go to template, and then go to save template. Okay, and you're gonna call it your name, yeah? So call it, and just click save. So you've saved this template now, so it doesn't matter what comes out, but let's adjust the properties on the color because I don't really like that green. So right click on the chart and then go to properties. And then we're gonna change from bar up, we're gonna change from lime just to normal green. Up to the right now. That's it. And then we're gonna change that from bull candle to just green. Okay, and then beer, yeah, that's fine.
Okay.
Yeah, that's fine. And then we're gonna save the template. So let's see if you remember how to save the template. And we're just gonna save over this template. So click on Dave's template, and then we're gonna basically click on save. And just replace it. Now what we're gonna do now, first step we're gonna do, we're gonna learn how we can actually open a new chart. So you're gonna go onto the Aussie USD. So click on Aussie USD, AUD USD, up, AUD USD. Yeah, that's it. Just click on it and then right click on it now, right click, and then click on chart window. Okay, and now we're gonna make it bigger now. Make it bigger now by clicking in the button. No, just click in the button there. You know, you've got a small and a bigger rectangle sort of thing. Just click into the expand button there. The expand button, just up, go up a bit to the
This
right.
one.
No, yeah, that one, yeah. Okay, so what we're gonna do now, we want to get the exact same chart, the blank chart. So right click into the chart now, please, and then go to template, and then go to Dave's template. Scroll down to Dave's template, and then we've got our template ready. Okay.
Okay.
Now, what we're gonna do now, what I want you to do, I want to zoom in to the chart so we can see it. Yeah, and then we're gonna zoom out now. Now, when you zoom out, right, we can see a lot more of the chart, right? Now, what I'm not seeing there, I'm not seeing the time, because the time frame. Let's see if we go to view for me, please, because I'm not seeing the time frame on there. Go to view, and then what I want you to do, I want you to go click on toolbars, and then what I want you to do, I want you to highlight time frame. Okay, so there's time frame. What I'm going to try to do, we want to put the time frame. Let's say we could drag those and move them to the side. So just click on it and then drag it up top. Just click on it where the time frame is. Go to time frame. Just hover over the time frame and just click and pull and see if that will move it. The time frame. Up,
Where's
up. No. Up, left slightly. Yeah, and let's see if we could drag that. So let's see if we could drag it. Just
this?
press and left click and see if we could drag it and move it. Did it move?
No.
I right click over it. Let me see what happens. Right, just hover over it. Right click and let me see. Arrange. Click on arrange. Click on custom arrange. And then let me see how we're gonna put that. Now let me see where could we put it. Okay. Let's leave it like that for now. Leave it like that for now. Okay, what we're going to do now, so what we've got there, we've got different time frames. We have the 1 minute time frame, so click on the 1 minute time frame for me, please.
This one?
Yeah, that's a 1 minute time frame. Click on the 5 minute time frame. Click on the 15 minute time frame. Click on the 30 minute time frame. Click on the 1 hour time frame. Click on the 4 hour time frame. And click on the daily time frame. And click on the weekly time frame. And then click on the monthly time frame. Okay, so that's on the monthly time frame. Okay, now what we're going to do now, put it back to the 4 hour time frame, because that's where we're going to trade from mainly. We're going to mainly trade from the 4 hour time frame, yeah? Okay. Now, so what we've got then is we're on the 4 hour time frame. What we're going to do, we're going to basically scroll the chart to the end. So try and depress using the left mouse and pull the chart. Yeah, you see every time when you see it comes back, so let go now, you see it comes back. So try, yeah, it comes back, yeah? Okay, so let go now. And then you're gonna go up to the top there. Okay, to the right now, up to the right, then up, yeah. And then what you see just to the left now, to the left slightly. That is shift end of chart to right border. So that's gonna shift the chart. So click on that for me. And it's gonna shift the chart so that you can see the chart. It's not over on the other side. Uncheck that bit now. Click on that again, yeah, and then go to the next one. And then click on that one as well. And then what I want you to do is go back to the chart, because don't click on it. Don't highlight it. So go back to the chart now, go no to the chart, and then you can pull now. So pull it to the left, because sometimes you might want to see at a particular point. So pull it to the right now. Yeah. Can you see it doesn't move back like what it was doing before?
Yeah.
Because you haven't highlighted it. So then you might want to see a particular point on the chart, and you can pull it as you wish. Okay. So that's how you would do it there in terms of pulling the chart. No, so that's one thing there. So what we've got now is we're going to be looking at, let me see, the next bit in the lesson is going to be now, we're going to look at these currency pairs, right? Now, if you notice there, you see Aussie USD, okay? And so what I'm going to do now, I'm just going to get you to stop sharing a minute while I explain a few little things, okay?
Okay.
Okay, so we've looked at how to save template and so on. Now what we're looking at is what's a currency pair. Now if I've got Aussie USD. Now the Aussie USD, right, is the relationship between Australian currency and the US currency. Now, I don't know if you heard what Russia said. Now Russia said, look, Germany, you can't buy anything, any of our gas in euro. You're gonna have to buy it in, the ruble. And of course, the Russian government, they had to increase interest rates significantly to combat what the West has been doing in terms of trying to depreciate the currency. So therefore, their economy goes in turmoil, and that sort of run them into ruins if they don't stop the bombing of Ukraine. Yeah, so that's the overall outcome that they want. If the economy gets hit, then it's more likely the people are going to get hit, and then the people then put pressure on the government, and then the likely chance is that Russia will have to cave in, because their money would actually worth nothing. Similar to like what they did to say Zimbabwe, where the money, the inflation got so high, they increased interest rate, nothing could actually, yeah. So basically, that's the potential what they want. But of course, the resources, Zimbabwe might have diamonds and golds and so on, but what Russia has is gas, and trust me, even places in Africa, in Nigeria, as a result, right? And Nigeria have got oil and all of those things, but Russia is the kingpin when it comes on to certain resources. So, it's going to be difficult for you to pin them down. However, if a country increases their interest rate, then that's going to be good for the currency. The value of the currency, as I said, would appreciate, meaning it's going to go up. Okay. So we'll have appreciation of the currency, meaning the currency value will increase if they increase interest rate. And that's what Russia had to do to see if they could combat the depreciation in their currency. But in fact, since they've increased the interest rate, Russia that is, I'll show you what their currency has been doing on another graph. Right, but what is the currency pair, right? Now we've got, this is the Australian currency, and this is the United States of America currency, right? And they trade, they do business with each other. Okay. Now, if we say that the Australian currency is going up, yeah, because and actually, in fact, this here is the base currency. The Aussie is the base currency. So that's the base currency in this case. Yeah, that's the base currency. And in this case, right, what we have is this. If you buy, if you think that the Australian currency is gonna appreciate, means go up, increase in value, then you would want to buy the Aussie dollar. And this is what they call it, the Aussie dollar, right? So if you buy the Australian dollar, then what you're saying, you're actually selling the US dollar, meaning that the Australian dollar is going to go up and the US dollar is going to go down. That's ultimately what's happening. Okay. Now you basically are saying that the Australian dollar is going to go up, the US dollar is going to go down. Now, to be honest, the Australian dollar has been going up, and I'm going to come and show you the currency pair later on. They have been going up, but Australia and how would this work in terms of the currency pairs? They tend to what? They tend to go up when their economy is doing really, really well. When the gross domestic product in terms of GDP, which we don't really need to know about these things, but of course I've got to still share them with you. I've still got to go through the fundamentals of trading. And I'm going to talk to you more about fundamentals of trading and also technical trading. Yeah, I've got to share these things with you. Like, for example, today we had a non-farm payroll, and the non-farm payroll, that's where we get like a big sort of movement. That's the jobs market, like how the American economy is doing in terms of providing jobs for their people. And if it's good, then the currency market, all over the place, and a lot of people are making money during that period. Okay, but of course, the currency market is over $1 trillion traded every single day of every single month, apart from the weekends. But of course, you go on holiday. If you're going to Australia, you're going to want to get Australian dollars. If you're going to America, you're going to want to get US. If you're going to Europe, you're going to want to get European dollars. So we're always trading with the currency pairs, right? But in terms of buying the currency pair, we are predicting that the market is going to go up, and we can make money if the market goes up. Of course, if we predict that it's going up and the market goes down, then that's against our prediction and we could lose money. But we could gain money. But there are ways and strategies that we can actually put in place to know when to buy and when to sell. And that's how the market works. Now, if we come back to this point here where we said to buy Australian US dollar, we're expecting the Australian currency pair, the Australian Aussie currency, it's going to increase, right? And that's the base currency. And then we're expecting the US dollar to go down. Now, what I'm going to do now, I'm going to be talking to you now. What if I sell this currency pair, right? What if I sell the Aussie? So this time I've got the Aussie, right? And I've got this currency pair here, and I'm looking to sell. Now, what I want you to tell me now, write in the chat for me, Aussie, write in the chat for me, what do you think is going to happen if I sell the Australian dollar? What do you think I am thinking is going to happen? Type that for me in the chat. And you can either send it to me, either to everyone, or you could send it as a private chat by a private message by basically clicking on my name. So I'm saying I'm going to sell the Aussie USD this time. Tell me, what do you think is going to happen to the Aussie, and what do you think I'm expecting to happen to the US dollar? Type that in the chat for me, please. Okay, yeah, David, you're correct. Well done. But also, yeah, Maya, yeah, that's correct. Well done. But also what I needed to do as well, I needed to basically, so we've got the Australian, because I'm selling the Aussie, I also want to talk right about the Aussie as well. Okay. Eileen, what about yourself? Elijah, what about you? Shirley, what about your answer? Come on, guys, go for it. Unless you didn't understand what I was saying there just now. Now, Shirley. Shirley, talk to me.
Yes. Yes.
Okay, Shirley. Okay, so if I said to you that I'm going to be selling the Australian, I'm going to sell the Aussie US dollar, right? What I'm saying here is that I am expecting, because this is the base currency right here, I'm expecting the Australian dollar to decrease in value, to go down. And then the US dollar now, yes, but the US dollar is going to go up. So the US dollar I'm expecting is going to be stronger and the Australian dollar to be weak. Does that make sense? Yes, Miss Bailey, yeah, you're correct. Eileen, yeah, you're correct. So the US dollar will be stronger. I'm expecting the US dollar to be stronger and the Australian dollar to be weaker. Okay? Does that make sense? Yeah.
What makes the Aussie dollar the base currency?
Because it's the one that's at the front.
Okay.
Because the market moves in the direction in terms of if we're going to buy or sell that particular currency pair.
Got you.
Yeah. So if I sort of look at, right, let me show you something else now. If I sort of look at, I'm going to show it to you to say, let me see the, let's go. This is a popular website. It's called Investing.com. And on Investing.com, right, let me look at the US dollar. Okay, this is the US dollar ruble. Yeah. Okay. Okay, let me see. I want any prices. Okay. Okay, so just waiting for this thing to come on. Okay, okay. So what I'm gonna do now is let me get this up now. Okay, right. You know what I'm gonna do? I'm gonna get you. No, it's probably this is not the best platform here to get it on. What I'm gonna do, right? I'm just gonna be asking David if you could. Okay, so David, what we're gonna do, we're gonna search for the Russian ruble just to show it to you, a popular currency pair at the moment. So you're gonna go over to where you see Market Watch in symbols. You're gonna right click. You're gonna right click in the Market Watch. Then you're gonna go to symbols. Go to symbols, yeah. And then we're gonna type in where you see that tick just above the word ticks, yeah. You're gonna type RUB. Yeah, that's the USD ruble. So click on it for me. And then you're gonna go to show symbol to the left where it says show symbol. Yeah, click on that. Okay, and then you're gonna click OK. Click OK. And what we're gonna do now, we're gonna drag and drop the USD ruble onto the chart. Okay. Now, What we're going to do now, we're going to look at it from the daily perspective. So go to the daily. And then also what we're going to do now, we're going to click to we're going to make the sell buy bar smaller. So hover, move your cursor up, vertically up again, to the left now, to the left, no, down, to the left slightly, down again, there, to the left slightly, and click on that button there, hide, yeah, that's it. Now what I want to do now, I needed to basically now, we want to move this chart towards the right. So we're going to scroll, so go up to the top now, up to the top, because we want to scroll it to, yeah, that's it. Scroll chart to the end, yeah, that's it. And then click on the one to the right now, click on the one to the right, which is going to sort of move it, shift it to the end, so the thing, right border. So click on that now for me. So can you see now at one point, the Russian ruble went all the way up. So remember, which currency is so everybody type in the chat now for me. We've got the USD ruble. Type for me in the chat which currency, either the USD or the ruble, is the base currency. So type in the chat now for me, which of these is the base currency. So type in the chat now for me, which one is the base currency. Okay, yes, Eileen, you're correct. Yes, Shirley, you're correct. Okay, anybody else? Yes, Elijah, you're correct. Okay. Right, so what about the others? What about the others? Okay, now, David, what if you notice here now, David, if you notice now, what we've got here is this. Can you see that at one point, the currency was 87, and that was the height of the war, when the war first started. Now, of course, the US dollar now is starting to appreciate. Again, meaning the US dollar is also increasing in value. Now, if I was to buy now, and let's go to a 4-hour time frame. Go to the 4-hour time frame. Go to the 4-hour time frame. Can you see that the market has been going up from the 15th? It has been going up, and then it goes up and then goes back down. So what happens to the market? Goes up. It's what we call ebbs and flow. Goes up, come down, goes up, come down. You know, but because of the crisis in Ukraine, the market is sort of going in one direction. Now put it on the 1-hour time frame. Let's see what it looks like. Okay, so can you see, for example, now we've got from 18th of February, the market has been going up then. Now, as you can see here, we've got red candles and we've got green candles. Okay, so we've got red candles and we've got green candles. And also what we've got, yeah, let me see, why is my charger? For some reason my charger, what does it say? Is it my, oh, no, guess what? David, I was there trying to sort of, I thought I was seeing I thought I was seeing my charger. So I thought I was seeing my charger, so I was there trying to fix it. David, can you hear me? Dave? Dave, can you hear me?
Yeah, sorry, I was just struggling to unmute it.
Oh yeah. Because I saw, when I look and I saw my battery level to die, I was there trying to sort my thing out, because I'm like, I don't want it to die. Yeah. So as we can see now, the US dollar is the base currency and the ruble is the what we say now, we've got the base currency and the basic currency there. So so if we say we're gonna buy the USD ruble, then we're expecting the US dollar to go up and the ruble to go down. That's basically what we're saying. So let's go to the Euro USD. Drag and drop.
Ask a question.
Yeah, yes, you can.
On David's chart, there's red candles, which suggest a depreciation.
Yeah.
Then there's a gap, and then there's red candles again coming down, but they're at a higher level than the ones previously. What happened there?
Okay, now why we had that gap is because of the war. Now, at the end of the day, nobody is expecting a war. Now, the US dollar appreciates significantly as a result. And this, some people even trade this strategy where, because there was a big, massive gap in the market and the market jump, you know, like for example, the value, say if, for example, if I was going to Russia, right, I would have, and I wanted to buy some Russian ruble, I would have to pay 82 for it. It would cost me, right, $82, right, to give you one ruble, right, would be $82 sort of thing. So, because that, so for example, if you know, like you've got the Jamaican currency, well, no, I'm used to, now let's use, which one should I use? I know the Jamaican one, like 200 Jamaican dollars, right, would give £1. Yeah. So you're looking at 83, right? Russian ruble would give you $1, if that makes sense. So that is the value. Now, another thing you've got to understand is that as the currency, as it gaps up into the, you know, basically the market was closed, and then when the market opened on the Monday, the market went all the way up. So a lot of people would have probably lost money because a lot of people weren't expecting this to happen. But of course, as I say, the market ebbs and flows, because what Russia did on the following day, Russia then increased the following week, Russia increased the interest rate. And by increasing the interest rate, then it's much difficult for people to buy from you, because they're going to pay at a high interest rate. But not only that, Russia's got gas and everybody wants gas. You see how significant it has affected us. And then what Boris Johnson did, he then went to Saudi Arabia to link up with some guys who the West said, you know, they're bad people. Then after that, he went to Venezuela. Then he was just, and then he actually gave, you know, Iran back the 400 million that they didn't give, and release some people. And, you know, so can you see that, you know, Russia's got a lot of power because they've got resources that everybody wants. So as much as they can say that they're going to put sanctions on them, they still can't sanction Russian gas because everybody need it, you know. But of course, yeah, it affected their economy, because of the and the value of stuff that they sell is going to be much cheaper than normal, because the currency has no value, you know. Now, hopefully I've answered the question there. Now, GBPUSD, let's come back to Euro USD. Now, the Euro USD, right? If I was to say I'm going to sell the Euro USD, can everybody tell me what I'm expecting to happen to the US dollar? So this, can you pull and drag the Euro USD on the chart, please? The Euro USD, up, Euro USD, up. Yeah, that's up one more. Yeah, that's it. Pull and drag it. So that's the Euro USD. Now, if I say now I'm going to sell the Euro USD, in the chart, type for me, what do I expect to happen to the US dollar? If I said sell the Euro USD, what do you think I'm expecting to happen to the US dollar? Remember I said I've got the Euro USD, and I said sell the Euro. I'm saying sell the Euro US dollar. What am I expecting to happen to the US dollar? Excellent, David. I would expect it to what? I would expect, because remember, you know, if I say sell the euro, that means what I'm saying, the euro is going to go down. Now, if the euro goes down, then the US dollar has to go up in value. Yeah, yes, Shirley. It means that the US dollar value will increase. And that's what's happening. And that's what's going to happen. Yeah. Does that make sense, Eileen?
Yes, it does. It does.
Okay, brilliant, brilliant. Yeah, excellent. So what we're going to have now, guys, let's do another one. Okay, pull and drag for me, GBP US dollar. So pull and drag for me, GBP US dollar. Now, Shirley, tell me if we know that, right, we've got 1.31, okay? So the GBP US dollar is 1.31. Now, Shirley, what do you think this 1.31 means? You're planning to go on holiday in America, right? You're planning to go, oh, we really need this holiday now. I'm telling you, I need a holiday. Oh my God. Yeah, Shirley, we're going to America, right? And guess what? At the moment, it's 1.31 to the British pound. So we've got GBP USD 1.31. What does that 1.31 mean?
That is like for like, pound for pound.
But remember, we've got the pound and we've got the US dollar, right? And remember, we trade with America big time. Now, what does that 1.31 means to you?
As in £1 for each.
So say that again.
I don't know.
But you know, when you use the word, you see in my sessions, when you use the word I don't know, I want to use the word I don't know yet, but I would like to know, because it's all about the psychology. It's all about the growth mindset for me.
My mind's not close, so I'd like to know.
Okay, excellent. Thank you. So, right, what I'm going to want to, is there anybody who can actually explain that to me?
£1 to 1.31 US dollar.
Yeah, so 1.3 US dollar is equivalent to £1. So therefore, which one has the bigger value? Which one is bigger in value? Which one requires a lot more to get? Anyone?
US dollar.
Yeah, US dollar has a bigger value or smaller value?
A bigger value.
No, the US dollar is going to have a smaller value because it takes more US dollar to buy the pound. Because remember, it takes $1.31 to buy £1. Does that make sense? So it takes $1.31 to buy a pound. You understand? Now, you see, for example, if we had a currency where you sold this and this was 1, yeah, then basically, so let's so basically what you have then is let's look at, say, we're going to look at another currency after, but let's look at this now. It takes, and remembering at one point, you know, it was $2 to £1, you know. But because I don't know, one of the reasons why the pound has depreciated and devalued so much is because they have left the euro. Because when the pound was with the euro, in terms of they're a part of the eurozone, sorry, the pound, right, was 1.6 to the dollar. So if we were to go to America, for every pound that we spend, we were getting like $1.60. Now we're only getting, since we had Brexit, we're now getting $1.31 for every pound. You understand? So, for example, in let me give, like, you know, well, I probably if I use this currency, I don't know, if probably to help. Now, say for example, Jamaica, right? At the moment, the exchange rate is £1 to 200 Jamaican dollars, right? Now, last year it was like, I think it was like it went up to 200 and something, but I think it was like say last couple of years ago, it was say £1 to $150, right? Now it's £1 to $200. So therefore, I would get more dollars for my pound because the Jamaican currency has reduced significantly. It's the same thing here. We've got the GBPUSD. The GBP, the Great British Pound, at one point was, just when we had the Brexit day, it was at £1.60. Sorry, $1.60 give you £1. And that's what it was way back then when we had the Brexit vote. And then it went down significantly after that. Yeah. Now, going on holiday to America. Now let's go back. Let's go to the daily and show you where we were at a couple of months ago. So click on the daily for me, David, please. And then, David, what I want you to do, I want you to scroll back. Now we're going to scroll back to a particular point now. Now, November 21, can you see at what, you know, just in November, you know, look, let's, David, what we're going to do, we're going to get a vertical line. So you're going to do for me, we're going to get a cross here. So go to the left with your cursor for me, please. And yeah, cross here. Yeah, that's the cross here. Brilliant. And we're going to move it onto the chart and we can see the date. Now go to after December and go to the highest point on the graph. So go to the 30th of December, 2021, and then go up now, go up with the cross here now, and then go to the right now. Go to the right, slightly. No, I want to the highest candle to the right. No, the candles. Go down now, scroll. Yeah, no, those are the candles, but I want the highest point. So move to the right now, move to the right. Slightly move to the right to the cross here. Just move to the right. Up to the highest point. The highest point of the candle. You know those green and red? Those are called candles, yeah? So move to the highest point on the candle there. So
This
yeah,
one here?
that's it. Yeah, that's it. Excellent.
Okay.
That's it. That's the highest point. Now, what was the exchange rate then? Look to the right now. You can see the exchange rate. Can you see the value there?
$1.37.
$1.37. So can you see how much money it has decreased since this is what 2022, you know? You understand? That was the 13th of the 1st. So in January, just 3 months ago, you could get for the pound, right? You can get $1.37 for every pound. So can you see how significant that would be? For someone like myself who pays like my daughter's school fee and basically, and then the pound drops significantly, you know, that's gonna eat into a lot of my money, you know, if I was, you know, I'm paying in US dollars. Because from 37, $1.37 to $1.31. So that's, you know, literally 60, almost what 0.06 there. That's 6 pence for every, you know, is gone, you know. But we're going to talk about the pips and all of those sort of things, so you'll have a better understanding of it anyway. Now, so any questions on that so far, guys? Any questions? Because what I really want you to do here right now is to understand that, look, we are trading in the foreign exchange market every time we buy products from overseas. We send money overseas. We go on holiday. You know, for example, when you come back to the, you know, when, say for example, we went to Europe where we had the euro, we come back to England. What we end up doing, we say, okay, we don't want the euro, which exchange, because we sort of took too much euro. So when we come back now, we're going to change back the euro back into pounds or back into wherever you're going to go. And sometimes you'll find you'll get less, because by the time you come back to the UK, the euro has probably gone up. Let's look at what the euro is compared to the pound. So I want you to, because what we're going to do now, because this is what you're going to do for me for homework, you're going to basically write about the base currency. You're going to say, for example, if I'm selling the Aussie US dollar, right, then basically what we're going to do is, then I'm expecting the Australian dollar to go down and the US dollar to go up. Let's look at this one that we've got here now. If we've got the GBPUSD, if I sell the GBP US dollar, and let me show what I mean by sell. So let me just show you what I mean by sell. Now, what I want you to do for me, David, because sometimes you might say sell and buy and then people don't really get it. No, David, what I want you to do, you know where you see that, move to the left, move you cross here to the left, up now, up, straight up, right there, right there. Click on that section there for me. Yeah, click there for me. Now, when I say sell, click on sell for me, please. Click on sell. Can you see I've sold? That's me selling the GBP. What I'm expecting is that it's going to go down, right? So what I want you to do now for me, just to show, no, that's it now. Move your cursor down to that line, that horizontal line where you see the sell there. Can you see I've actually put a trade on? That's where you put the trade on. That's as simple as that. And can you see that 13 pence there? So I've actually just sell the GBPUSD. Now, what I want you to do now for me, I want you to pull down for me. Just click on it. Click on that line for me. Click on the line. Left click on that line. Just left click on it. Just left click on the chart. Left click on the chart. And I want you to pull down now. Yeah, when you see that, pull down. Just hold down. No, yeah, hold down now. Yeah, that's it. Can you see? That's your profit you would make if the market goes down any further. Okay? So that's what the profit you would make if the market goes down any further. So that's it. Let's close that trade now. So what I want you to do, you see to the right where you see that X, you're going to click on it. Click on the X. To the right now. Look where we see the trade. That's it. Click on that. Now that's us selling. Can you see at 10K? Now you've got 99982. So you have to pay to go into the trade. We'll talk more about that. What I want you to do now for me, I want you to buy. We're gonna buy. If I buy the GBPUSD, I'm expecting it to go up. Now pull up for me, please. Pull up now. Depress your mouse. Pull up. Can you see that? I would make, if the market goes up, then I'm going to be making what? If it gets up to that point where it was as 130, 190, I'll be making £6.29. Okay? So that's what would happen there. All right, guys? So what we've got now is this. So close our trade for me now, please. Close our trade. So that's what we mean by buy, and that's what we mean by sell. So if I said to you that I'm gonna buy the GBPUSD, I'm expecting the the Great British Pound to increase in value and the US dollar to decrease in value. Now what we're gonna do now for me, you're gonna go back to Market Watch. You're gonna go back to Market Watch, right click, and then you're gonna click hide all. And then what we're gonna do now, we're gonna right click in that section there. And then you're going to go to symbols. And then you're going to go to major. Click on the majors for me. Click on the major. Go up to major, up. For FP market. No, to the left now. Forex major. And then we're gonna click show symbols. Scroll down to show symbols. Yeah. And then all of those major currency, those are the major currency pairs in the world. So click OK now for me, please. Now, what you're gonna do now for me, you're gonna write for your homework the GBP, New Zealand USD, Aussie USD, and the Euro USD, and the USD CAD. You're gonna write down for me, please. Buy GBP USD. What does that mean? You're expecting that the GBP is gonna increase and the US dollar is going to decrease or go down. So if you don't want to use the words like decrease, depreciate, just say go up or go down, as simple as. Okay, so we're going to do those 5 first currency pair. Those are the major ones. We've got a Hong Kong dollar as well, but don't forget the Japanese US. Where you see that USD and JPY, that's the US dollar, Japanese yen. Where you see the USD CHF, that's the Swiss franc. Where you see the USD CAD, the US dollar versus the Canadian dollar. Where you see the euro, that's the European Union, and the US dollar. If you notice, all the major currency pairs are traded with the US dollar because the US dollar is the most traded currency in the entire world. Now, your homework is a simple one. Just understanding the meaning of these currencies. And when we say we're going to buy, what are we expecting to happen? When we say we're going to sell, what are we expecting to happen? And that's it. Now, we've got 3 minutes. I'll take one question. Max, I'll take 3 questions for a minute per question. 3 people. Yeah, who would like to be that person? Anyone? Anyone at all? Okay, since we have no questions, then what I'm going to do is, so David, if you could stop sharing, and I'll just do a quick update there. Yeah. Okay, guys. So what I'm going to do now, I am going to just going to go back to the PowerPoint and show it to you what we've done today now. So what we've done is we've looked at how we can save the template. We've looked at how to use the properties on the chart. We've done that from last week. We've looked at saving the template. We've talked about the buy and the base currency. We've also talked about what's the currency pair and how does it work. We also we spoke about the what are the majors, and we didn't talk about the minors today, but we spoke about the majors, and we didn't talk about that. So we'll get into those next week. Okay, guys. Thank you very much for your participation today, guys, and I look forward to teaching you more next week. So, and if you could get other people to come in and join in and learn new concept and new content, then that would be brilliant. And I will upload this video to you guys, later on tonight. God bless. Speak to you all soon.
Thanks, bye.
Yeah, bye.
Thanks,
Bye.
Marlon. Take
Yeah,
care.
you're welcome.
Thank you,
Bye.
Marlon.
You're welcome. Bye.
Bye now.
Bye. Thank you. Bye.